Welcome to Morpheus Trading Group. Today's technical setup involves an analysis of the S&P depository receipts, ticker symbol SPY, also referred to as the spiders, and we're looking at a possible trend reversal in the broad market, in the S&P. Now, before we analyze why we think we could have a trend reversal going on here, let's take a look at what we are referring to when we say a trend. Notice that starting back in about September of last year, or August, we've been setting a sequence of higher high compared to this previous low. We set a higher high, a higher low compared to this low, a higher high compared to this high, a higher low compared to this low, and so on. This high is higher, this low is higher, this high is higher, this low is higher. And if we draw a line across the bottoms of these lows, we get our trend line, our uptrend line. And actually at one point we had a trend line that sloped like this, that actually moved along the 50-period moving average until this break right here in March of this year, during the Japan crisis. But this trend line was our primary trend line until just recently. And it's important to point out some very interesting price action that's occurred recently that gives us a clue as to why we might be in the midst of a trend reversal. Last week, for the first time since August of last year, September of last year, we broke and closed below this uptrend line. At no point, going all the way back to August or September, had we closed below the uptrend line. At no point had a high or low close below the uptrend line. But this in fact occurred last week. After that, we had a very impressive spike, rally back into the trading range, into this range. So we undercut the 20 period, which is here, and the 50 period, this bluish colored line. Moving averages, we undercut those, and then had a very significant rally back up to reclaim support, not only of the two moving averages, but also of the trend line. Now today's price action is really critical. It's something that we really must pay attention to, because just when we had reclaimed support and it looked like that we might go sideways here or consolidate a little bit, maybe get a little bit of a pullback, but possibly consolidate to go to new highs, we had a dramatic reversal today. And this reversal caught everyone off guard. Within a single candle, we took out 3 days worth of rally. These 3 days of rally were wiped out in one candle. And in fact, this price move in the S&P is the largest price move since August the 11th of 2010. When you get that type of unexpected reversal, accompanied by massive volume, a major spike in volume, and in this case, break below a long-established trend line and close well below it, there has to be reason for concern that a trend reversal could be underway. In order to confirm that we are in a trend reversal, the next move we would want to see would be to establish a lower low. So here is our last higher low. If we were to close anywhere below this, it could be here, here, it could be down here, but we would be looking to establish a new lower low. And of course that would be the first lower low since August of last year, because these are all HLs, higher lows, 1, 2, 3, 4, 5, all of them. that would be this was the first major signal to break a trend line that we could be in a trend reversal. But the next and probably more important signal would be to establish a lower low. The next indication that we might be in a trend reversal would be to establish another lower high, where this high is below this high. And of course, then from there, if we established a new lower low, that would be ultimately considered the full confirmation that we are in a trend reversal. So it's very important at this time to bear in mind that we are at a very precarious point in the market, and taking on significant long positions here could be dangerous, particularly given the price action today. If you enjoyed today's presentation, please join us at www.morpheustrading.com. Again, that's www.morpheustrading.com. And you can sign up for your free subscription to receive analysis like this every day. Thank you for joining us today.